Okay, good.
Yeah.
Ready? Okay. Okay, you're on. You're on. You're on. So we have something. I have something that I try to do with these is you know, hey, when you go, well, have you ever gone to a TV show, like a live show, and they have some guy come out and beforehand and warm up the crowd?
Yeah, yeah.
This is my
Just a
warm
warm
up.
up act.
Yeah, this is my warm up act. He comes in and he like picks a dad joke
Oh,
and
perfect.
throws it out there to the crowd. And he's really into cards. He was, you know, I was raised in a household where we didn't there was no gambling.
Oh, okay.
And so I never learned blackjack. And so he's been teaching me blackjack, which
Pretty
has been
cool.
great.
You'd
Yeah.
be a good blackjack player, I would think.
Yeah.
I mean, it's
I
kind of like
poker.
like trading almost.
Yeah. Yeah. There's a great book by a poker player, Annie something.
Yeah,
Have you read that
I
book?
heard about her. She's a is it Dukes?
Yeah. 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 Annie Duke.
Uh-huh. I've heard about her.
Like on making decisions. Like
Yeah, I think I actually got that book because it was in somebody's. I saw that somewhere they said like this is one of the greatest trading books.
oh yeah.
It
I
has nothing to
mentioned
do with trading, but it's
I mentioned it on John's channel. Maybe it was that.
maybe I probably wrote it down from there. So
But yeah, she has a couple of them. They're really great. It has a lot of traders refer to it. It has nothing to do with trading, but it has to
yeah,
do with making decisions, you know, like
yeah. Yeah,
so
I
I'm gonna
wouldn't want to
start.
play poker against her.
Yeah, me either. Me either, especially since I don't know how to play. Okay, so I'm gonna start to let people yeah, show us a magic trick.
So, pick a card, any card.
You can hear me okay?
Yeah, yeah, you sound fine.
Card, any card.
Okay.
So I won't look. Now I'll show it to the camera.
Okay.
Okay, now.
For all you joining us, we're doing magic tricks. Okay.
Now, everybody has their card. I'm guessing. Everybody knows
Everybody?
the card, right?
Yeah, everyone saw it.
So now, here. I don't know if you guys can see it good. I don't think you guys can.
Uh, okay. I don't see it. I don't think that was the one.
Do you have this card? Did you have the Jack of Clubs?
I think so. I don't remember even.
Did he
Was that
did?
it?
Yeah.
Man, you're gosh. Hey everybody. Hey Michael, how you doing?
Hi, good. How are you?
Good. I love that view. We my son, well, we're gonna go actually. Every year my son and I used to do a San Francisco trip and we'd go up there and we'd go up to that point right there and look at the Golden
Mhm.
Gate Bridge.
Okay. I
Great
live
picture.
here.
Are you from there?
Yes.
Oh,
Yeah.
nice. On that side, like San
I'm
Rafael?
in Campbell. It's the South Bay.
Okay. Oh, nice. Yeah, I was working up in San Rafael and Mill Valley, like during
Mm.
the dot-com boom and bust.
Yeah. It's it's in the north. Yeah.
All right, the people are coming in. Tony, hey, it's good to see you, Tony. Leo. Leo's a name from the past. We got to hook up, Leo.
Yeah,
Jerry,
we do.
how are you? How are you doing? Are you driving trucks?
Yes, I'm driving.
Nice.
I'm driving. I'm just freeing up, getting a little time to get in. I've been trying to join one of your meets for quite a while now.
Oh, cool. Are you driving right now?
No. No, I'm not.
Driving and watching?
Couldn't do that. No, I got some free time. I'm at home, so glad to be here.
Yeah, it's good to see you. Tom Soughton, Denny,
Justin is reading.
Justin reading.
Yeah, I think he's reading.
All right. So let me give you just a second more here. And so while the last stragglers are coming in, uh, here's another one. So as many of you may know, I have my CEO with me today behind me. He comes in and he warms up the crowd with a dad joke. And recently we saw Jaws. I showed him Jaws And we went to the Academy of Motion Picture Arts and Sciences down here have a Jaws exhibition where they have all the old real props and everything from the movie.
So I'll have like a bunch of other stuff too.
Yeah, it's cool. You like that?
Yeah, I loved it. It was really cool.
And I'm gonna make a video on it and post it. But so I asked Connor to find a Jaws or a shark dad joke to kick us off tonight. How he warms up the crowd. So you ready?
Mhm.
Okay. Speaking to the mic.
Okay, so did you know that the girl from Jaws had dandruff?
No. I didn't know. Is this a joke?
Yeah.
Okay. No, I didn't know that.
Oh wait, hold on. Sorry, that's me.
Was that the punchline?
No.
Okay, so
The
let's not lose it. So the girl, so say it again. Did you know that the girl from Jaws had dandruff?
did you know that the girl from Jaws had dandruff?
The girl
The girl,
or the shark?
the girl.
Okay. No, I didn't know that. Oh yeah, the girl at the beginning. Okay, no.
Yeah,
I
they
didn't-
found her head and shoulders at the beach.
oh man. That's borderline inappropriate, Connor. No, that's good. That was a good one.
Good one.
Nice.
Bye.
Thanks, Connor. All right. So let's get going. So I've recently met Brian Terry. I actually, John from Theta Profits, well, he didn't really introduce me. I think he mentioned him on the last meeting we had when we had John on, and I had already seen some of Brian's videos on John's channel. He has, what do you have? Like, you have 2 or 3 of them,
I think, yeah, 2 or 3. Yeah.
and they're great. Highly recommend checking them out. So one of the strategies was really kind of in line with a gamma scalping, or similar to a gamma scalping idea that I'm doing, and also a strategy I've sort of tried to master in the past. And so I reached out to Brian and asked him if he could come on and share the strategy with us, and he agreed. So I'm super thankful that you've joined us, Brian, and you're going to share it. And it's actually sort of it's a variation of the trade of one of your trades. It's sort of a new one.
It is, yeah.
And so I'm just going to hand it over to you and let you take it away.
Okay, this is I did a strategy a while ago called the delta neutral strategy, and it's been really popular. I was looking through my YouTube channel to see how many views, and it has like 3 times as many views as anything else. So one of the things I wanted to do was share like a variation, and I was gonna see if I could share my screen.
Yeah, you should be able to share it if you.
Okay,
The very bottom there is a box with the arrow that says share.
okay. Let me just get to the right thing first. So this is what I call my my Airbnb strategy. So let me put it in slideshow. So it's actually just a double diagonal, and it's mainly for income. And I trade it on the SPY, and it can be done pretty much on any you could trade it on SPX, you could trade it on the Qs, you could trade it on anything that has a frequent option. And there's the Mag 7 stocks has 3 options in a week, so that would be a one that you could look at. So what I wanted to do is just go through it, share some actual trades, and then at the end, if we wanted to go to the option chain, just to set it up so you can see some of the different variations. Does that sound okay?
Sounds great.
So
Hey, Brian, do you want to tell us a little bit about yourself and kind of
sure,
your history, how you got into trading? You've been trading for
sure.
a long time.
Yeah, be happy to. I am a retired certified financial planner. Was in the industry probably 20 plus years, and I was up in Charlotte, had a practice up there, a fee-only practice. And my dad, I grew up in Winter Park, Florida, where I'm at now. My dad got sick, so I sold my practice and moved back to Winter Park, and had a lot of free time other than helping take my dad to doctor's appointments and stuff like that. So I really focused on, learning how to trade options. I had traded them, on and off all these years, but really never spent a lot of time. So, over the last 10 years, I've been, trying different strategies in options, and really I found that they're just a lot of fun. So I retired from the corporate world, and basically a retired trader. And I live in Winter Park, Florida, which is just outside of Orlando. And I work with a couple of other groups that I'll mention. I have a Facebook group, and we also have a Central Florida options meetup group that we do a monthly meeting, and we do it on Zoom too. So if you guys want to join the group, you don't have to be in Central Florida, but we'll Zoom it, and they're all recorded anyway. So that's about me. Let's see. I went to school in Central Florida, big UCF fan. So that's a little bit about me. And so back to the strategy. It's a double diagonal, and really all that, in case, I'm not sure how many people have traded a double diagonal, but it's really a long call and a long put, usually at the same expiration that's further dated, further out expiration. And then we sell shorter dated puts and calls against it. So basically, you'll have a long strangle and a short strangle. And I like to go out about 45 days because then theta doesn't impact the trade as much. Now you can go out longer, you can go out shorter, but that's what I tend to look at doing. And if you guys have any questions along the way, don't hesitate to ask.
Yeah, and yeah, you can, well, and also if you want to just put them in the chat, anyone who has questions along the way, and then
Okay.
we can either address them as we go along, or at the end we can just go through them.
Perfect. Okay, so that's just the basics. And when I have found, I've been trading this strategy pretty consistently all year. So when the markets are choppy or in range bound, it's been a really good strategy. And I'm a big fan of, more as close to delta neutral as you can get. So, and I like income strategies. So that's where they're useful. And I like to find risk trades where you know that if all hell breaks loose, you have a defined risk, and you want less gamma risk than just short condors. So that's um, where they're useful. And what type of environment does this strategy work? And I think it works great in when the VIX is in a moderate range, not too low, but definitely not too high. You don't have like a lot of immediate events coming up. And when the market is in a trading range, it's not in a roaring bull market or a bear market, just in a range. And it doesn't work as well if you enter the trade when the IV is high. And the reason for that is when you want to get out of your long calls and the IV drops, you'll lose value in your long strikes. And if the market is just ripping higher, it doesn't work. So what I will try to do is kind of wait for the market to settle down, be in a range, and then get into the trade. So the way I trade it, again, I wait for a lower volatility environment. And I entered one on Monday, a trade on Monday. And the reason I entered it because the volatility dropped like 15% that day. And I said, well, shoot, this is a perfect time to get into the trade. And so I'll go over the details of that particular trade. So, I like to buy the calls and puts at the money going out about 45 days. And I put an asterisk next to the at the money because several of the trades that I did, I actually bought like a 25 delta, which really lowers the cost of the trade and increases your return, but also impacts your buying power and the amount of risk. So I'm still working which is better. But right now I'm at the money. So if the strike, if it's at 670, I'm buying the 670 call and the 670 put. And then what I do, which is a little bit different than the delta neutral strategy, is I am selling a daily call and a daily put against those longs. So I'll have, a long strikes that go out 45 days, and then I sell calls and puts against them every day. And like Dan was saying when we were talking before we started, sometimes you can actually sell the call twice in the same day or the put twice in the same day and get extra credit. So that's kind of the setup. I try to go out about 1.5 times the expected move where I sell my calls and puts. And generally what I've been doing lately is on the call side, probably looking to sell around a 10 delta, and on the put side, 12 to 15 delta. And I generally will sell the shorts in the afternoon. So, when I put the trade on, I will sell the call and put against them right away. But then at about 2 o'clock, 3 o'clock in the afternoon, Eastern time, then I will either roll them or out to the next day. And then in the morning, sometimes the call that I rolled out the afternoon before has already captured 50% of the credit. I'll adjust it within that same expiration. So that's kind of the activity of the trade. You buy the calls, they just stay. I don't adjust the longs at all during the trade. I sell the daily calls and puts against them. I'll adjust them throughout the day. And then I look to close the trade about 2 weeks after I start it and then start a new trade. So that's kind of the way avoid, a lot of theta decay. So that's how I trade the strategy. Any questions?
I have a quick, just kind of to clarify. So you're basically buying like a 45-day straddle.
Yes.
Okay. And then you're selling both a call and a put.
Correct.
1.5,
Times the expected move.
okay. Yeah. It's the expected move. And you wait till the afternoon to do that. And those are zero DTE options.
They are. Well, like in the afternoon, I would sell the next day.
Oh, okay.
Yeah, sorry.
So you don't do anything in the morning?
Well, what I'll do is when I buy the longs, I sell the calls and puts right there as well. And
I
then
see.
in the afternoon, that's when I roll them out to the next day.
Okay. So on day 2, you opened the day likely with zero DTE shorts and the
Correct.
straddle in place.
That's exactly right.
And then you roll those zero DTEs at the afternoon time frame to the next day.
Yep. And if I wake up, like say tomorrow morning, I wake up and one of my shorts is, I've already captured about 50% of the credit. I will roll it using that same expiration, the same zero DTE for more credit.
Got it. Okay, cool.
So, and then I found that just trying to close it, not keep them open too long, then the theta doesn't eat into your profits.
Yeah. And actually we have a couple of questions in the chat real quick that may
Yeah.
be appropriate for this. So one of them is, what if the market moves huge after you put your trade on?
Well, that's the risk in the trade, right? Because if it goes through your short strikes, then you've got to manage it. And I actually had a case, my last one, where the market moved through my shorts, but the long strikes actually ended up being profitable so that it overcame the loss of the short strike. Um, so, but it is a defined risk trade, but that's probably the downside. If you put this trade on and something really wild happens, then it could go through your shorts. But I can also adjust them out again to the next day and stay out of the money. So
Right.
That's a that doesn't happen in a normal trading environment. Of course, we're not in a normal trading environment right now, and really the only reason I started one this week was because I have a trading buddy that wanted to learn it, and I said, okay, I'll just do one contract just to show you the mechanics of it.
Okay, cool.
Okay.
Another question was, I'm sorry, real quick.
Yeah.
So Scott asked, says these are singles, correct? Not spreads.
They're not spreads, right? They're long, a long call and a long put that's 45 days out, and then a short call by itself and a short put by itself.
Right. Then my friend Omid says, what is the average debit per contract that you pay? And then he asked 3,500. Maybe he found that, like, maybe he modeled it up. So what is
Yeah,
the
I think
average debit per contract?
yeah, the current one that I have open will cost me 37.19.
Okay.
And earlier I was doing a lower delta, and they were as low as $700. Uh,
Mm,
so $1,000. So you can go to the lower delta strikes and pay a lot less, um, or you can go at the money, and they're probably I would say probably $30 to $35.
okay. And then another one we have here is, how do you select the strike for long?
I go out, I buy the at the money. So right, if I was setting the trade up today and I was going to do at the money, I would buy the 670 call and buy the 670 put.
Yeah.
And then if I was doing like a lower one, I would say you could use like the 25 delta call and the 25 delta put.
Okay. And then one more here. What are the strikes for your current trade?
Yep, I'll walk through that. But the current one for tomorrow, I have the 662 put and the 679 call. So right now it's 671 pretty much.
820.
So that's the current strikes. And
Okay.
today's one I rolled twice, so I was able to collect like $82 in credit by adjusting the early one. So
Yeah. Today was a nice kind of a stagnant day.
yeah. So but great questions though. Any other questions?
One just popped in, and it's referring to the last one. So the first question that you already answered was, what are the strikes for your current trade? And then you answered it, and then he asked, are these the shorts?
Yeah, those are the shorts.
Okay.
And they're 318 expiration.
Okay, great.
Excellent. Okay. So, how does the trade make money? The time decay, the theta, works really well for us. And if the price stays generally within that range, our long strikes hold their value because I'm only keeping them open about 14 days. And the other thing is, if you have a situation where you bought the longs when IV is lower and it goes up, then you can actually make money on the long calls and long puts. One will lose money, one will make money, but overall you'll make more money. And generally, the max loss is equal to the amount that you paid for the original. That would be the max loss in most cases. So it's risk defined.
Right. And you probably see or have the potential to see profit just from a rise in volatility too, right? If volatility
That's
goes up.
exactly right. That's the one trade that I was only in for like 2 days because it blew through my one of my shorts. The volatility in the longs made me so enough money to overcome, and I was able to make a nice profit in a short trade.
Oh, right.
So, I mean, it's a fun trade. I always kind of equate it to like a chess match that you're trying to figure out what to do next, when to roll, and things like that.
Yeah.
Um, And it works best in a range-bound market, not a roaring bull market or a roaring bear market. Hopefully, we don't have that come anytime soon. And what you want to do is the movement of the SPY or whatever you're trading, you want it to be within kind of the two levels of your short expirations. And you don't want strong bullish or bearish. If you are kind of bullish on the market or bearish on the market, probably this isn't probably the best strategy for you. But if you're uncertain, which most people are these days, it's a good strategy to kind of hedge your bets. And because you have the long call and the long put, you're generating income from selling the shorts. And if the IV goes up, like you said, Dan, your long positions will actually go up in value. So that's
Yeah.
when it works best. So here's my current trade, and I know it's pretty wordy, but I started this on Monday, and I entered the trade because IV or the VIX dropped like 15%, some really big number it dropped. So I said, okay, I called my friend up and said, okay, let's put this trade on. So I did this on 3/16 Monday, and I bought the April 30 670 call and 670 put. So it was a little bit, it was trading at 668.84, and I paid 37.19. So at the same time I bought the long call and the long put, I sold the 3/16 same day, 673 call and the 663 call, and received 52 cents, which is 1.5% of what I paid for the long strikes. Later that day in the afternoon, I rolled those guys out to the next day. So I rolled the put to 660 and the call to 677 and got 84 more cents. So I got, the 52 plus the 84 the first day. So the next day when the market opened, I rolled my put up from a 660 to a 666 and collected another 23 cents. And then later in the afternoon, I rolled my 317 options out to 662 and 669 and collected another 82 cents. So since Monday, I've collected $2.41 or 6.5% of what I paid for it. So that's kind of how the strategy works. So I will keep, doing the same thing, for probably till the end of next week and then just close. And now I may end up closing this one because the Fed meeting is tomorrow, but that's kind of how the trade works, nuts and bolts. Any questions about any of the numbers there?
Not from me. We have Tony asked, can you show us a complete trade? So this is sort of that, but I think we're also going to look at an option chain.
Yeah, we'll do that kind of at the end if that's
Yeah, that'd be great.
okay. So that's just a current trade, just to give you kind of an idea of the mechanics involved. So here's some trades using this strategy that I closed out this year. So my very first one was 20.84% in 16 days. And so I was in the trade from 1.9 to 123. And so here's the numbers. I made 148 out of the risk of 710. And so I put little asterisks. These were lower delta strikes, just so you know that. And then the second one, I ran from 122 to 26, 16 days, made 18.67%. The third one was 20% in 8 days. And then this last one was the one I said where it blew through one of the short strikes and I had to close the trade, but I made enough in the, profit in the long strikes to make, a really nice trade in 2 days, 6.5%, 6.4% in 2 days. And that one was an at the money. So you can see the difference in how much they cost, right? So these, guys are, 700 to 1,300 versus 6,300.
Right.
And my current one is 3,700. So that's just some examples of this strategy that I've already closed out this year.
Cool. Now, this when you with the asterisk bought lower delta strikes, maybe you already mentioned this and it went over my head, but is that a situation when you say that you use the lower delta strikes?
Right.
Is
I
that like you're
bought
using a strangle instead of a straddle?
Yeah, I just bought the 25 Delta put and the 25 Delta call.
Okay.
And
Got it.
and it works really good. It just it does increase your buying power requirement, and it increases your max risk in the trade, because really your max risk is the difference between your short strike and your long strike. Whatever that difference is, that's kind of the max potential risk.
Right. And then, so then the last one, it blew through the strikes, but because of the volatility rising, it worked out.
It did. Yeah, the
And maybe,
long,
oh, sorry.
no, I was just going to say the long put made enough money more than the long call. So I was able just to close the whole trade out
All
for a
right.
profit.
And then maybe you'll get into this, but like what's the worst that could happen? Or like that, to me, that would be the worst. It would just blow through it. But in that case, the volatility went up, so it actually helped you. But
Yeah, I mean,
are there situations where is that the main risk is that it's gonna blow through a strike, but the volatility won't go up?
yeah, I would say so. I mean, if the market, ripped higher and volatility didn't go up, that would probably be a real a problem. And again, generally your max risk is going to be what you paid for the what your net debit was. But and the only time it's happened is was back, I think that was about when the war began. Um, and the market went down, so IV went up, and so it worked out okay. But that one was a little bit of a hairy situation, and I didn't enter any more until this week, just because the VIX was too high, the war is going on. But I did one just to kind of walk through some, the trade with a trading buddy.
Right. And we have a couple of questions here. Maybe it'll be
Yeah,
appropriate to ask here.
perfect.
So let's see here. So Omid asked, lower delta strikes mean you bought a strangle, which is what I also asked. So
Yeah.
we got that. Uh, Larry asked, do you do this on SPY only?
I'm testing it out on SPY. You could do it on SPX. That's kind of the goal if it works. And as I ramp up the contracts on it, I'll probably do SPX.
Okay. And the similar strategies that you do you do those only on SPY or do you use like the Qs or
I
anything else?
Yeah, I do on the I do a lot of different strategies using SPX. Um, But this is a new one, and so really wanted to test it out using SPY, and I've increased the contracts, except for this last one. Um, I do a long-term put spread using SPX, that has worked really well over the couple of last years, and I'll also I do a lot of long diagonals using individual stocks or ETFs. But but a lot of them are kind of evolving or kind of boiling down to using SPX. I don't trade the Qs too much. I just kind of stick to the S&P 500, either the ETF or the cash index.
Yeah. And here's one from Michael. He asked, what was the percentage return if buying power is included in the calculation?
You know what? That's a great question. I think what it'll end up being is about the same number. Um, this let me see, the fourth one. Yeah, I mean it's hard to tell, because if I had paid 3,000, it'd probably be somewhere in the range of, I'm going to guess, half of that number. Like the 20% would be more like 10% if you included the whole buying power.
Okay.
Um, that'd be
Stephen,
that's a rough guess. I didn't go back and look at it that way.
yeah. All right. Steven asks, once you buy the longs, do
Mhm.
you leave them alone until the trade is closed?
I do, yeah. Like my delta neutral strategy, if anyone's familiar with that, I would recenter the strikes back to where that's trading. And so in this particular strategy, I leave them alone, but I only keep it open a couple of weeks.
Okay, cool. I think Michael, I think that's just a comment and like a sidebar conversation. If not, please ask that again. Then Omid, he says, this is a theta negative strategy. So with one SPY contract, there is at least $30 loss a day. Do you consider this when selecting the short
I
call
do.
and put?
I do. I look at what the theta is, on the short, I mean, on the long per day. So I know I have to make more than that for the trade to be profitable. So, and it usually always is. Otherwise, I wouldn't be putting the trade on. But so if you go out 45, days and look at the theta versus what you're collecting on the short call and short put, you have to take that into consideration.
Yeah. And then a follow up to that, he has is have you ever been assigned the calls or puts? How do you manage when the strike goes deep in the money, close with
Yeah,
a loss roll?
I haven't been assigned. On that last one, I just closed the trade. Um, but sometimes if it'll get close, like on the short put, I will roll it out to the next day and roll it down further. That's all that generally works, because the market doesn't go down for, multiple days in a row. But I haven't been assigned because you really have to watch it and make sure you know where it's trading, and I will adjust them pretty much around 2 or 3 o'clock, um, so that I don't get into that 3 to 4 craziness, where the market really could run one way or the other.
Yeah. And if you were in the money at the close, I mean, you would just get out anyway, correct? If it's well, wait, let's see.
It,
That would be the following day, so maybe not necessarily.
yeah, like for the most part, at the end of the day, at 3 o'clock, my shorts are the next day's expiration.
Right.
Yeah.
Okay.
Unless I'm planning on closing the whole trade, I'm going to be gone. I'll be out of the trade by, or out of those zero DTE shorts by 2 or 3 o'clock.
Yeah. And then Michael quick asks, have you ever considered longer DTE, like DTE one zero to one DTE could be a lot of work.
Yeah, you know what? I did, and the Delta Neutral traded weekly shorts.
Right.
And what I would do there is I'd probably use I wouldn't go 45 days, I'd probably go at least 60 days, on my longs, just because you have fewer opportunities to sell against it.
Oh, I see. And that's the weekly, and that's the video that they can find. I'll include links to these too, but that's the
Okay.
video that's on on John's channel.
Yeah, yeah, yeah.
Okay, cool.
And I at the end of this, I put a couple of links like to my YouTube stuff and the Central Florida options and my Facebook. And then I have a private group I work with, a buddy in Orlando. He does a lot of zero DTE or short durated SPX, and I put my trades on his group. So.
Awesome.
So that's just a brief summary of, and again, it's a work in progress, but it's been a lot of fun, and they've been, pretty successful so far. So, some alternatives, you know, and like options, anybody can, you can change the strategy any way you want. So one of the options would be to use lower delta strikes we talked about. So like buying the 25 deltas instead of the 50. And I have done that, and they worked pretty well. The lower cost is offset by the higher buying power reduction. And there's more risk because the spread between the two are higher. So I had done that one. They've worked out, well. The other approach that has been suggested is to use unbalanced strikes. So, say for example, you buy the 25 delta put call. You buy the 25 delta call, and maybe you buy the 20 delta put. So you make it a little bit of a bullish tilt. Um, I haven't done that, but that's probably something I'll probably look at some point.
Well, yeah.
And then the other approach that I haven't tried yet, but you could buy, 5 longs and 4 shorts or some variation like that. So there's lots of different things you can do with the strategy. Um, and I've tried the first one. The second two are pretty, at least interesting. I haven't done them yet. If I do, Dan, I'll share how they worked out if you want.
Yeah, absolutely.
So that's, some alternatives to the just at the money s- uh, position. And here's I just put this on option strat just to play around, but I did the four, the April 30th. This is the current one, and these are the current strikes that I have open that expire tomorrow. So this is what option strat looks like. And one of the things that I played around with as volatility goes up, if I had the live version, it would definitely bring the tent just up further. So thought that was at least some people like to see what does it look like and that. So I just figured I'd just punch it into option strat. So.
Yeah. I'm one of those people.
Yeah, so it's I don't know if it's like a great representation because every day it changes, right? So, but at least it gives you like current world, like this current snapshot of what it would look like.
Yeah.
Okay. Um, so that is all the slides that I had. Any questions? And then we can go to an option chain and kind of set one up if you guys want.
Yeah, that'd be great.
Okay.
Let me see here. We have Denny says hi and thank you. He had to drop out.
Oh,
Denny
thank you.
Whelan. Uh Michael mentions that at the money with SPY has a bullish tilt because of the skew.
It does a little bit, yeah.
And then Omid says, usually strategies like this will reveal over time if they are a good one. How long have you been doing this?
Just this year. Well, I did the delta neutral last year, and those worked really well until volatility kind of spiked. So they again, you want to stay out of this kind of a strategy when volatility is, rapidly increasing.
Yeah. Is there kind of a rule of thumb that you might have, like if VIX is above a certain level or below
Yeah,
a
I
certain
mean,
level?
I usually don't start a new trade if the VIX is 25 or higher.
Okay.
And because I mean the problem really isn't in getting into the starting the trade because you pay more but you get more for selling the short call and put. But the problem is if once volatility pulls back down, then you lose value in your long call and put.
Hmm.
That's what I found to be the real problem is, you paid, $40 for it and volatility drops and now it's down to 35
Yeah.
with no other change. So that's kind of why I kind of just stay, do something else if the volatility gets too high.
Right. And then Omid also asked, what is the rule of thumb for selling calls and puts every day again? Which I think we went over at the top, but
Yeah,
maybe a real quick recap of that.
yeah. What I try to do, let me see if I can go back. I generally try to go 1.5 times the expected move. And I generally am going to sell somewhere about the 10 delta on the call side and about a 10 to 12, maybe as high as a 15 on the put side if it's more, of a bullish kind of market.
Hmm.
So, and then, somebody had asked about the theta. So I know what the theta is when I put the trade on those longs. So I definitely want to make, way more than that in terms of what I'm selling every day. And that really is not a problem because I'm going out far enough to overcome that.
Yeah. Sergi asks, do you see a way of selling zero DTE but buying one DTE, turning all this essentially into a zero DTE trade?
I mean, I haven't tried that. I mean, it sounds I mean, you talk about a high maintenance trade. That's pretty much a one and done kind of thing. But so this is kind of was more built, I called it the Airbnb. It's kind of like you bought the long and the put, and then you're renting it out every day, for a few weeks.
Right.
So it probably, it's probably an idea worth looking at. I just haven't done that.
Yeah.
That's what I love about these meetings, Dan, is people come up with really good ideas to make your
Mhm.
strategy even better.
I know. Me too. Okay,
Um,
cool. So, and if anyone else has any questions, put them in, or even pipe up if you want. If you want to, like, unmute yourself if you're muted and ask with your real voice. Don't hesitate. And I'm going to put so this slide deck I'm also going to put into the chat, and
okay.
I'll include all these links
Yep.
and the PDF in
Yeah.
the YouTube video that I post as well.
Okay. Yeah, I used to have my Facebook used to be called the Conservative Covered Calls. And we changed it to the Conservative Option Income Network. We just thought, well, since I was doing way more than just covered calls, we wanted to expand that. But you all are welcome to join the meetup group. You don't have to be in Central Florida. Um, and my YouTube channel. And then I have a private group where I put all my trades on is the stock market options trading. And that's the Conservative Option Income Network as well. And
Okay.
then I have my email. If you have questions, I'm happy to answer them after the meeting tonight.
Yeah. And if you'd like, let's just kind of hit on these again real quick. So I joined your room when we talked several weeks ago. And is which one of these links is that?
That's the first one. That's the stock market options trading.
Okay. And you have a free trial for that, right?
Yeah, there's I think it's a week, 2 weeks, something like that, and there's a free version of this, and I always do a Monday. I do a market kind of a summary every morning. You probably see it, Dan.
Uh-huh.
And then like this Monday, I put it on the Facebook group. I'll probably do that just because that's more of a like a weekly summary of what happened and a different market, matrix of stuff I look at to kind of gauge what the market is and what's coming up, like, what economic reports and things like that.
Right. And then in that group or in that site there, you pretty much list your trades that you're making every day throughout the
I,
day, don't you?
I do. I post all my trades in this group. I post some of them in the Facebook, and then the other two are more informational stuff.
Yeah. Okay.
And so let me see if I'm gonna stop my share, and then we'll set up that trade if you guys want, just to
Yeah.
kind of walk through how that works. So I'm just gonna go to SPY, and so I would just go out. Can y'all see my option chain now?
Yeah, I can see it.
Okay. So if I was going out 45 days, I'd probably, I generally like to sell the monthly. But in this case, I'm just going to look at, 45 days out. And if I was selling at the money, I would buy the 670s, and that would cost me like $35. And so and the net delta is 3 delta positive. And then I would look to sell something for tomorrow. I would wait for the market open, but if I sold something like the 677 and the 662, that would, pay me about 47 and so about close to $1. So $1 divided by whatever that was, 35. So that's about, 2.86%. And if you just go back to, I think one of the questions earlier was the theta. So, it's going to go down 20 cents a day on this side and 19 on this. So basically 40 cents a day in theta, and I'm going to get about $1 for the first trade. So, and then every day I'm going to, um, look at adjusting these out at the end of the day. So if I put this on tomorrow afternoon, I'm going to roll these out, and I can roll them out at the same strike or up or down depending on what's moved. And and then the next day when when I wake up and the market opens, a lot of times one of these strikes has already captured, 50% of the credit, so I can roll it again using the same expiration. Um, Now, the other thing I was going to show you guys is like if you go back here and instead of doing this, the at the money straddle, and I went ahead and let me just close this and I bought the 25 instead. And I'm just looking at, I'm not worried about the open interest because it's just for example. But um, if I bought these two guys, this one's going to cost me $8 and this one's going to cost me, you know, $6. So it's about half the cost of the at the money. But you see over here, the buying power is still about the same. So it's, you pay less, but the buying power is kind of the same.
Mm,
So that's the reason I kind of said, well, you might as well do the at the money because it's the same thing in terms of buying power or what you pay for it.
yeah.
And
And
the
on,
risk too.
right. And on that one, on the strangle,
Mhm.
like how do you choose those strikes?
I just did a 25 delta.
Okay.
I mean that you could go like you could say, well, maybe I'll go here because it has way more open interest, right? So that'd be, in reality, that's probably what I would do something more like that. And that's almost a delta neutral, right? It's point 0.24.
Hmm.
So, and the buying power is about what I would have paid had I bought this at the money. So I always find that pretty interesting. Uh,
Yeah.
so if you run your calculation based on what you paid for the long, it's way higher using the out of the month, the strangle. But that's kind of the meat of the strategy. It's not a very complicated strategy. It's just more of a maintenance and it's an income strategy. And I'll do this for, a couple of weeks, close it out, wait for to start another one.
Yeah. And you were saying that at times you can do this several times in a day. Like
Yes. Like
is
for example, if I had instead of I had an open short call and a short put right now. Tomorrow morning when the market opens, one of them will be up, right? Because the market's going to move somewhere. And if it's moved, I can adjust and roll that short call or short put up using the same expiration date. So I can get 3 credits in one day if I do that.
yeah. And does that happen? How often does that happen, do you
You know
think?
what? It probably happens at least half the time.
Oh, really?
Yeah, yeah, because if you have them like today, the market gapped up, right? So I was able to, roll my put, up and make a nice profit.
Yeah.
So if it rolls down, you could roll your, call um, up. So it's kind of fun, so you're not as stressed when there is a gap because you're going to make more money selling another short. You get to squeeze another short out of your day.
Right. Now, are you ever tempted to be irresponsible like I am and like sell two or like sell a additional credit spread?
I haven't done that, but um, one of the things that I had in the notes is, doing an unbalanced number. That's
Mhm.
pretty interesting to me. And then also, um, I'm gonna really look into the unbalanced strike. So instead of saying, like if we were looking at this one and I was maybe bearish, I might, do something, make it more of a delta negative, you know what I mean, overall.
Mhm.
So you can play with it by just adjusting the strikes. Now one is a 29 delta and this is um, a 21 delta. So it makes it a negative, delta. So it's not a delta neutral, it's more of a bearish tilt to it.
Yeah. So in a case like that, you would most likely do that if you had some sort of uh, idea or thought of which way the market was going to be
Yeah.
moving, like a directional stance.
Yeah, if I was, I mean, and you can look at, are we below the, whatever moving average you want to use? Are we below the 50-day moving average? You might have more of a bearish tilt to it. Or you could just say, like I'm always going to try to stay completely delta neutral.
Right.
It's a cool strategy in that it gives you a lot of different ways you could do it.
Yeah.
And it has daily options, so you could do it and I've toyed around doing it on something, one of the Mag 7s that have options 3 days a week. You could do that as well.
Right.
So
And as
same
I hear,
concept, just how you want to set it up and trade it.
yeah. And as I hear you explain it, it's like for me, it's something that I might even like. I trade like say condor type positions that are further out in time, but some days I want to be more active and some days I don't. And this is maybe something that I could kind of like I could stack on top of that
I think
and,
so. Yeah.
and go in there and just kind of have fun or try to have fun scalping.
Yeah, I mean, it really is. I'm not a big chess player, but it's kind of like a mind thing, like, okay, where do I, like if your short call is being challenged and then it pulls back, then you're good. It's kind of like, um, but on SPY, it's been good because, it doesn't move very fast. So you're always, $3 or $4 out of the money. Um, and if it starts to run, then, you have plenty of time to roll it out to the next day.
Hmm. Okay, we have a couple of questions here. Michael asks, would it help in low vol situation to buy longs with less DTE?
That's a I mean, the good thing about buying in a low vol environment is that if and when volatility does pick up, um, those long strikes are gonna be worth more just by the increased volatility. So I'm good with a low, vol environment to sell this strategy because your volatility is always or usually higher for the shorter period than the longer period. So you're still getting, a net higher volatility on the short strikes than the long strikes. And then when it does go up, then you're even in a better shape on your long strikes and your long call and long put.
Right. Omen asks, what is your bread and butter strategy?
You know what? That's probably, I'm, a lot of people say, well, ask that question. And I like to try lots of different strategies. Probably my bread and butter is my long, um, I use a 10 delta put spread, go out 45 days, sell a 25 wide, get about $1.50 and close it out at 50% profit. And I have a 300% stop loss. That's my best performing trade by far, never lost on the trade. And because you're so far out of the money on SPX. And so I always put, some on Tuesdays and Thursday every day, every week. I will put that trade on.
Oh
And
wow. Can you
and
can you say that again? Was is it's a credit spread?
yeah, yeah. I always name I think you do the same. Don't you have a name for all your strategies, Dan?
Yeah.
Yeah, this one's called the Igor, and but it's an SPX put spread, and I'll go out about 45 to 60 days. I sell the 10 delta put, and I'll buy the put 25 points below it, and I set an exit for 50% and exit the trade if the credit goes up three times the credit. And I haven't had that happen. Um, if you
Wow.
want, Dan, I can show you a real quick slide of that.
Sure.
Would you want to
Is
see
this
that?
yeah, absolutely. Please do. And is this there's a video in your site that I joined. Is
That's
that
it. That was the last one that I did. Um,
is that the
and
same strategy, that video that you
it
have in
is.
there?
That's exactly right. So let me just show you this. Find it first. Has this been helpful?
Oh yeah, absolutely. Thanks so much.
Oh, it's been fun. I always like talking about this let me see if I can bring. So this is last year when I did it. So you know, I put this on, and so SPX was at 6,000. I'm selling the 5,500. Um, this is the ROR for the trade, time in the trade, and then annualized. So, and I, go through, and then I here's what kind of summary of the trade in June through October. Um, made about on average 3.74% in 15 days, 90% annualized return. This year has been a little tougher. Um, I mean,
But you haven't been hit this year?
I haven't. First in January, I made the 3%, 21 days. This is 2.86, 26. These ones that I've closed out in March have taken a lot longer to be in the trade, but it's really a great little strategy, and you can see I call it the Igor.
Yeah.
Um,
So the one you have there, it's like says that's 2.8%. Like
which one
how was
is?
that exited? Or just
Well,
that
I mean, any of these are, I would get, I like take this one. I bought it in January. I used the 223 expiration. It was 47 days. I got 130, 135. I did two contracts. So I closed it at 50% and I made $130 on the two contracts. So 130 divided by the risk
yeah, okay.
is 2.75.
I see. That's yeah, that was my fault. That's not
Yeah, I didn't mention that's the risk here. So I put down in the spreadsheet, what was the risk in the trade. So um I was kind of I was traveling in December, and so I kind of restarted back in January. So but it's a nice fun little strategy. And I was just talking to somebody today and we went, this is a strategy that's really hard to beat.
Mhm.
And you don't have to really worry about it too much. I mean, like here's one I put on today, and this SPX was at 67.21. I got $1.40 for selling a 5,900 put.
Yeah, that's pretty far out.
Yeah, and so if the market goes down, 50 points, I'm not even looking at this thing yet.
Yeah.
Um, and
So
so
your exit's three times the credit?
Yeah, so if I got $1.40, it'd be whatever
Hmm.
at 420, and I would lose, 280.
Yeah.
So some people will try to get 60%, and that I don't think it changes the overall timing too much. One thing I'd say about this strategy, Dan, that's pretty interesting is that it doesn't. They exit in clumps. You know what I mean? And you might end up with a bunch of different, trades on, and then one good day in the S&P, you might close out three or four batches of trades.
Right.
So it's pretty cool little
So
strategy.
so you would have multiple on at the same time.
Oh yeah, yeah. And I would probably have like eight batches at the most on at one time.
Okay.
I generally do them 2 days a week.
Yeah. Yeah, thanks for sharing that.
Yeah, I mean, that's a great question. I mean, and I tried lots of different things, and that one, it doesn't make a ton of money, but it's great, solid income without stressing about it.
Yeah. Okay, I'm going to catch up on some questions here. This one was asked about 10 minutes ago. It says, in that example, which strikes would you short? So I'm not sure.
I don't.
I'm not
Um,
on the ball enough to
oh,
know which
you
one
mean
that.
for my example, I had March or tomorrow 662 put, and the call was 677.
Okay. Here's one that says, what do you do with the strike if that is already in the money next day? Close it?
I would. That's never happened yet, but But yeah, I would probably look to close it because something weird happened. I mean, that'd be a massive move overnight.
Yeah. Here's another one. What did you do with your call today? And then there's a follow-up is, I mean, if the call or put gets in the money, won't it go into a deep loss?
Yeah, well, going into the day, I had a 677. So I was, 7 points out of the money. And then today I rolled it out to a 679. So it never got close to the short call today.
Mm, okay. And then there's another one. What was the expiration for today's trade?
On the long, it is, let me see it here. Let me go back. My longs are April 30th on the current trade, and my shorts that expire tomorrow are 662 and 679 on the call side. So,
And then he just corrected himself. He says, no, the credit spread, the SPX credit spread. Well, I guess
oh,
it was the credit
oh,
spread
the one I did
trade,
today. Let me go back.
the other strategy.
Oh, okay. Let's see. Today I sold the May 1st, 5,900, 58.75.
All right, cool. Yes, and there's a video on that in your site as well. Is there,
Yeah.
did you talk about this on John? So you have an in the money covered call strategy on John's channel. I recommend everybody go over and check that out. His videos on John's channel as well. He's got like 3 of them and they're all great. And then
Yeah.
you have a video on the credit spread strategy you just told us about in your
Yeah.
site.
Yeah. Yeah. And the Delta, I mean, the in the money covered call, that's kind of where I started at. And that's been a pretty good strategy. It's more capital intense. So I only do that now if I can grab the dividend.
Oh,
So kind of get a dividend and a call. And
oh
so
yeah.
that's,
Okay.
I don't do a lot of those anymore.
All right. Let's see. We got, is there a video showing the put credit spread strategy?
Yeah, it was a recording from our meetup strategy, our Central Florida meetup. It's on the YouTube channel. It's the most recent one.
Oh, cool. Okay. Yeah, I'll put, um, well, actually, I uploaded the PDF. Can everyone see the PDF in there that I just uploaded with has those links in them? I thought I uploaded it. Is it in there? Yeah, there it is. Does everyone see that okay? I know there was an issue last time, like some people could see it and some couldn't, but all the links to that is in there. If you want to, Brian, it's up to you. If you want to just type in the links in the chat there, maybe it'll be easier for folks to click on them. Or,
Uh,
and I'll also just I'll be sure to include them in the replay of this inside
okay.
my school site and also on the YouTube channel.
Yeah, and if anyone needs to reach me, it's brian.terrycfp@gmail. So if you have a follow-up question or something like that, I'm always happy to answer emails.
And then a couple of people, it looks like they couldn't see the PDF, so I just uploaded it again.
I see it.
Oh, you do? Okay, good.
Yeah.
Hi, Mary. It's good to see you.
Well, this has been a lot of fun, Dan.
Thank you.
Hey, thanks so much, Brian. I really appreciate it. Everyone, check out his stuff. He's got the Facebook group too. I've been a member of that. I didn't even realize it was your group, but that's a great resource as well.
Yeah, I think we have like 5,000 members. It's
Oh, wow.
crazy. Um,
Yeah.
but yeah,
Right.
join our group in the meetup. It doesn't cost anything. So we do a meeting about once a month.
Oh, nice. Okay. Good. Does anyone else have anything? Any questions or good stock tips?
Yeah, I need that.
All right. It looks like that's it. Thanks everybody
Awesome.
for coming out. Thank you, Brian.
You're well. Oh, you want
The
me
re-
to let me just type in that email address. Somebody had
Yeah. and then I'll post this in the school site quickly, and then I'll also put on my YouTube channel with all
Great.
these links. So thanks
Thank-
again, Brian. Really appreciate it.
That was fun.
stuff. And
Y'all
thanks
take
everyone
care.
for showing up. All right. We'll
Thank
see you on the next one, everybody.
All right.
Take
Bye,
it
everybody.
easy. Bye-bye.